Namaste, Sat Sri Akal and Adab. Welcome back to another episode of One on One with Mr. Bond. This is Sunil Jhaveri, your host, also known as Mr. Bond in the mutual fund industry. Today's conversation is going to be extremely interesting after the GST rationalization. Some of the sales which have happened on the first day of Navratra. So you would have guessed as to what is this theme and what is the topic of conversation today. So welcome Ritesh, who is the National Head Sales Retail for Motilal Oswal Mutual Fund, who's going to discuss this theme with us. Welcome, Ritesh.
Thank you so much, Sunil ji. Always a pleasure talking to you.
Always, always. So Ritesh, first day of sales of Navratra, thanks to the GST rationalization, sales of all the auto companies. I will not name the companies also, but the sale numbers were immensely impressive. The consumer electronics numbers were also immensely impressive. Now there are double engine dhamaka of the government, which they have given benefits to the investors and the customers. First was the exemption limit increased to 12 lakh rupees on the income tax side, and now the GST rationalization. So what do you have to say about this particular theme, the consumption theme, the current situation in the theme, and what are your thoughts as far as the Motilal Oswal AMC is concerned?
So, Sunil ji, I mean, honestly, the first day of Navratra, imagine people will love to buy and we have just gone through a period of Pitru Paksha where people tend to avoid buying of the new things, honestly. And so with the government initiative to cut the GST rate, for example, in auto from 28% to 18%, and similarly for the electronics, I think the big jump came in the entire auto and electronic space. People were eager. People, looking for some kind of relief from the government as they are now aspirational and they want to make sure their lifestyle upgrades. They move on, add more, all these gadgets to themselves for the families. And I think nothing could be better than the government of India giving them a kind of a relief in terms of the lower GST, as one wonders for the consumers, because they actually, picked up the entire sales on consumption side, which was slightly muted because once the announcement was made and people were just waiting for this 22nd of, October to happen, go about and buy this stuff.
So this is basically the disposable income, which is going to be in the hands of the customers, consumers, basically. One is from the exemption limits increase from 12 lakh to 12 lakh rupees in terms of no personal income tax. So that itself is going to add about 1 lakh crore of disposable income in the hands of the customers. And the GST rationalization, I believe, is going to add another 2.5 lakh rupees, 2.5 lakh crore rupees in the hands of the customers. So this disposable income, which is going to be in the hands of the customers, is not going to go towards the staple and the essentials buying. It will go towards the discretionary spending. And what is discretionary spending and how is that going to help the consumption theme?
So absolutely, Sunil, I think very rightly put that, government has given two reliefs to the consumers of the country. So, and also remember that the 8-pay commission would come in very soon. So apart from the
that's an additional bonus.
Yes. So the 30,000 tax a person would have paid in case the income was 12 lakh. Now because of the rebate, now the tax liability is zero. So like you said, 1 lakh crore of consumption boost came from there. 8-pay commission will also going to add up to the entire consumption thing. And we also have to see that this entire space, which is consumption, what we call it, is divided into two parts, non-discretionary and discretionary. Now, discretionary is something which is something we use for our daily lives. Let's say we want to have shampoo or a soap or a hair oil. These are very, very basic requirement of a human being on a daily basis. You cannot, survive or could not have a decent life because of these things. So these are the basic needs of a human being. So these are categorized as non-discretionary. Now, discretionary is something which you spend out of your willingness, right? So, for example,
you wish to aspire to spend.
Aspire to spend actually is that, for example, let's say you want to go and have let's say a vacation somewhere in India. So you book a airline ticket or a train ticket, whichever you would like to do. You book a hotel. Let's say if I'm going there, and maybe you plan through a tour operator, or you do it on your own through some digital website, etc. So point is that you are spending out of your willingness, out of your aspirations to for a hotel or a flight, etc. Now this is an discretionary spending. Now something which is very, very relevant from today. So we have been seeing every day the gold is hitting a new high. Every time I open a let's say website or a mobile, I always see the gold is hitting new highs. Now again, if you look at jewelry, it's a big part of discretionary spending.
Correct.
Right? Again, people tend to buy jewelry out of the aspiration and a willingness to have that commodity with them. So the entire discretionary is huge, actually, to be honest, Sunilji. You look at, let's say, for example, an alcohol category. You look at a category of cars, auto, which we just talked about. We can look at, let's say, jewelry. We can look at white goods. We can look at other appliances. So in the whole category is very, very big. Even hospitals comes under the same thing. So it's a very wide category, discretionary. And that's how these two are divided, discretionary and non-discretionary.
Sure. As far as the consumption theme is concerned, one is, of course, the boost from the government side in terms of the personal income tax limit raising of the exemption limit and the GST rationalization. The interest rates are getting softer and softer. Inflation is under control. Monsoon is extremely good. So if you can throw some light on these macro factors which are aligning along with these government rationalizations also.
So, Sunil, like it is said that, one thing cannot propel you to achieve everything, what you intend to. You need multiple things to work for you, multiple triggers to work for you. And like you rightly said, it's not only the GST rationalization, it's not only about the tax rationalization, it's also about the macros. And today, in the last over 1 year, we have seen the repo rates coming down by almost 100 basis from 6.5% to 5.5%. The inflation on an average, the last printed number were close to 1.5% on the CPI side, on the inflation. So which for a country like India, if your inflation are lower, again, of affordability of an individual increases. If the interest rates are lower, which means that you can actually go out, you can take few things for EMI, pay less interest on it. So entire personal loan, if you see year on year, you will see a significant, change in term on the higher side in a personal loan, which will get triggered by the, aspirations of the youth and supported by the lower interest rate and we just talked about on the inflation side.
Correct. Absolutely. Now tell me, even the working age population of India versus China, if you compare, India surpassed China somewhere around 2020. China peaked in 2020, and India surpassed China by in this particular current year of 2025. The working age population also adds to the possibility and the muscle power as far as the consumption theme is concerned.
Absolutely. I mean, why not? So who will spend? So the money will be spent by the people who are actually in the working force because they're earning, right? So they're spending the money. So 2010, I remember China became the one of the, just a maximum in terms of 22% of the population was the workforce in China. And like you rightly put it, we just picked them in 2023. And now we are the highest or the largest working force in the world. Now imagine this working force, and every year we have more people joining the workforce. Now the aspiration of today's youth is much more beyond than what it used to be 2-3 generations back. Today's youth is more inclined to have the best of the mobile phones, best of the laptops, TV, fridge, shoes, car. They want to travel abroad. They want to experience a lot of things, right? For them, experience takes the priority, and that's what is actually supporting the entire working force in terms of the higher working force in enabling India to increase the consumption in terms of the opportunity across this discretionary theme as we did today.
So the natural corollary to this is that the per capita income also is on the rise as far as India is concerned. We are at an inflection point, what China used to be a few years back, and that per capita income increase also is going to be a big tailwind as far as the discretionary spending is concerned.
Absolutely. So for us, who is look at the best country which is in terms of consumption today. So China is one country which is actually taken off in the last 2 decades. And if you look at China closely, like you mentioned, China, the biggest boom came, between 2006 to 16. The per capita increased 4x in China that point of time. The China per capita was close to 2,600, 700 something dollars in 2006. It moved to close to $5,500 in 2011. And by 16, it was almost 4x. It was something range of $11,500 to $12,000. So because of this huge jump in per capita, which also happened because of the higher workforce, like we just discussed moments back, this higher workforce enabled per capita to increase significantly in China, and which actually made sure that over the next 10 15 years, the growth in the multiple discrete segment like a car sales, passenger air traffic, consumer durable sales actually picked up like anything in China. For us, we are like Der hai Durust hai. So it's 2025, India arrives to the world with a similar per capita like China. So we are in 2000 and we will test $2,800 in 2025. And we will also be like China over next five and a half years, 2031 to be approx, we will be reaching 5,300 per dollar per capita, which means that we, just like China, or for that you take Japan, it also 10 years from 1970 to 80, their per capita jumped by 4x. So was Korea, so was China, and so will be India, something similar. It is said, right? History does not repeat, but it does rhyme. And we will also rhyme like China.
Correct. Now, consumption is witnessing a major transition. So, first of all, we used to be only concentrating on the toothpaste and the soaps and the shampoos of the world, which is like the essential spending, the non-discretionary part. Then it used to be, now it's changed to the lifestyle, and then finally the experiences. And within that, there's a food, beverages, home and living, entertainment, leisure, fashion and personal care, technology, automobiles and finance, because you will be NBFCs and the banks would be lending money towards this segment also. So can you throw some light in terms of how this transition is happening and how this is beneficial?
Sure. So basically, if you see, Sunilji, we are in a time or we are in a phase where what we are saying is that people are transiting from a spending on basic staples to for the experience. So why it is happening? Let's understand the root cause for it. So today we are a $2,800 per capita country, but 10 years back, 20 years back, our per capita was 1/3 of what it is today, right? Now in a country where a per capita is very low, people tend to only attend to their basic and hygiene requirement first. They will not go for the experience or will not go for the aspirational.
पैसे नहीं है, पैसे नहीं है तो कहाँ से एस्पिरेशंस लाएंगे?
सही बात है, आप रोटी दाल और बाकी चीजों में आप फंस
रोटी
जाते
कपड़ा
हो जीवन में.
मकान के basic essentials, once they are fulfilled, then only can you think of going beyond.
Absolutely. So pehle, what happened that people just was tending to the basic requirement. They were getting a house, maybe having a decent food on the table, and maybe making their children go to a good school. That was the very very critical part of the two generation back. That was the main important things used to be. But now what has happened? Last generation has done a lot for their children. Now today's children are much more aspirational. Now today's children are more keen to go for, like we just discussed, I in Mumbai 15 days back, there was a phone launch of a very very big company, and people were in the line from the midnight to get the phone.
Wow.
और लग रहा था कि आप फोन ही ले रहे हो, शायद वड़ा पाव की दुकान में खड़े हो. So
that kind of मुफ्त में बांट रहे हैं कोई.
Absolutely. And what was the age of the people who was in the line? 26, 27, 28 years of people. Correct. So like you said, how they are consuming, let's say, such expensive phone. So once they are joining the workforce, since the basic things are taken by their parents or maybe their family members, they are primarily focused on fulfilling their aspiration related to experience, right? And how do you do it? Very easy. You have a personal loan company helping you out, NBFC giving you a personal loan, something on a EMI, and you just swap the card or you take the EMI of that company and you buy it. As simple as that. So just like America, if you remember, in America
so today, basically we are following the American culture of buy now, pay later.
Absolutely. आप leverage देखिए ना सुनील जी, in America, people are leveraged to the fullest extent. Even the balance sheet of America is so much leverage for that matter.
Correct.
Right? इंडिया हम लोग लीवरेज कभी रहे नहीं है. We were primarily focusing on उतना ही खर्च करो, जितनी चाहते उतना फैलो, right? That's what
We
we
used
used
to
to
be a saving society.
saving society, right? Now from a saving society, what we are seeing, the new generation picking up these new trends, and because of that, आपको क्या दिख रहा है? You are seeing higher sales in jewelry. You are seeing, higher sales in the e-commerce. Look at the food e-commerce segment, how it is picking up, right? The entire
Correct.
segment. So today, because of the changing aspirations, because of the past generation doing the basic work for the new generation for the making sure all the basic things are hygiene is taken care of, and with more money hands of the working force, this propelling our, and sorry, and I miss one part, is not only that, also that for a big part of our society, what has happened is that they have not been able to uh, they've been able to get a lot of things which are basically like a kind of a need of today. For example, look at number of household with air conditioner or a number of household with refrigerator. So today,
Correct.
a good part of society does not have these amenities, which I'm not calling it luxury today, but these are uh, basic things in today's scenario. But nahi hua hai. So that is also is a reason why you are seeing lot of consumption, discussion happening every day in the news. You are seeing uh, let's say, one article at the front page talking about either the e-commerce sales or about the auto sales or about the credit card transaction increasing 5x during the first few days. So that's what we are hearing every day now.
So tell me now, this is not a sectoral or a thematic NFO, right? Because it will have a lot of sectors also, the way we have discussed and described. And on top of that, will it not be a large cap, mid cap, or a small cap oriented? So it's basically a multi cap kind of a theme. So how would the investors view this particular NFO of consumption scheme of yours in terms of putting it into their portfolio? Should it be a tactical allocation? Should it be a core portfolio? Because this is a long-term theme, as I can understand it from.
So you rightly put it that consumption itself is very big. So if you look at consumption as a percentage of GDP, or look at revenue of Nifty 500, so it is almost half of the GDP and half of the revenue, half of the let's say profits of the Nifty 500 company. So
Correct.
consumption is a big space. It is comprised of multiple sectors, like you rightly put it. Okay.
So
So
it
it
can
could
be termed as a sectoral theme, right?
it's more of a larger thematic piece, not a sectoral. Sectoral would be more very, very skewed, very, very narrow kind of
Correct.
a, when you pick up a industry, then it becomes very narrow. That's a sector. But when
Right.
you, for example, an auto, that becomes a sector. But
Correct.
in consumption, auto is also part of it. E-commerce is also a part, or let's say the new age consumer tech company could be a part of it. We could also have the, for example, let's say hospitals part of it. So there are multiple segments. You can have a jewelry company as a part of it. You can have a paint company as a part of it. You can have
Correct.
a footwear company as a part of it. So it is comprises of multiple subsectors, I would say, right?
Absolutely.
So this is going to be a very, very not a narrow fund in terms of portfolio construction, but quite a
Right.
widespread fund. So client can be rest assured that money is not going to only one sector, but multiple sectors. So a risk also get diversified if there are multiple sectors within a theme. So that's
Correct.
what. Second thing which you very aptly asked is in terms of the construction of the portfolio. Now, construction of portfolio, because we are looking at, making a portfolio of those companies which are basically part of the discretionary theme, we are primarily focusing on discretionary, luxury, and that segment, because in today's scenario, the earning growth of some of the companies or the theme itself is very, very significantly higher versus, let's say, today on the staple side at this point of time. So the fund will be focusing more about the discretionary companies in terms of portfolio construction, as the earning growth continues to remain slightly elevated in that segment. And within that, we are not looking from a point of view of buying a large, mid, and small. It will be the end result of the entire process.
Okay.
And as I speak to you today, there are opportunities large cap, there are opportunities in mid cap, there are opportunities small cap. So it will be more like, you can call it a multi or a flexi. And multi is a better word because today in India, a lot of flexi are large cap oriented. So I think you chose the right word for it, multi cap. So it's more like a multi cap this portfolio, where you will see large, mid, and small. And the market cap decision end of the day will be the result of the portfolio construction. Will not go about deciding it upfront, but rather than the companies which will come in a portfolio will actually decide the what's a final market cap allocation.
What will be the benchmark?
For this consumption, TRI will be the benchmark for this one.
Okay.
Yeah.
Now tell me now, from what I've heard so far from you, is you're not going to get into those traditional essentials manufacturing companies like shampoos and toothpaste, etc., soaps and shampoos, etc., which has now gone into a single digit kind of a earnings growth. So you're
Correct.
going beyond that, which is the discretionary spending, where the earnings growth will be much higher. Is that what you're trying to capture?
So our aim is to capture the earning growth. So while we are not blinded by any particular, let's say, space within the consumption, but as you rightly put, in the last few years, what we have seen, the earning growth on the staple side has been quite narrow, single digit, or at times negative also. Whether discretionary continues to, company continues to have a quite robust on the earning side. So choices are multiple there. Our focus is to capture the new opportunities in the consumption space, which is, we believe, will be propelled by the higher, spending by the consumer, with more per capita income increasing, more money in the hands of the our consumers. They will try to fulfill their desires of some of the consumer durable segment where a penetration is very, very low. Air cooler in India, household penetration 17%, refrigerator is 35%. China is closer to 70-90% in these segments, right?
Wow.
So whereas like you said, shampoo or a hair oil or a biscuit penetration is already 95, 90, 99%. So there the higher growth may not be there because the penetration already played out to a great extent, right?
Yeah, the additional income is not in the hands of the customers, is not how much can you buy the essentials.
Absolutely. And there's an Angel's law comes into play, Sunilji, is that Angel law says that as your income increases, the money spent on food falls, freeing your wallet for discretionary spending.
Correct.
So basically, let's say if you are earning, let's say, a 1 lakh rupee today, and your amount towards the food is going, let's say, 20,000 in a month. Not just because you are now going to earn 5 lakh rupee, let's say, you're not going to spend 1 lakh on the food. You cannot eat more rotis and more sabzi and more
Correct,
biscuits,
correct.
right?
Absolutely.
So which will actually freeing your wallet for your wallet for discretionary spending.
And
That
premiumization. Maybe you'll go to a better restaurant.
absolutely, and let me share that to you, that there are two kind of things. Either people are consuming some of the new segments out of the aspiration, and second is that people are upgrading themselves. So
Correct.
हर 3 साल में लोग का फोन बदल जाता है.
Yeah, the experiences also which they want to have.
Right, so less like car or a mobile. So a lot of, we have seen that people continue to upgrade themselves. And one unique data I'll share with you is that if you look at the numbers in terms of our income pyramid, you will see the growth of the upper middle class, affluent class is also moving up. Besides the bottom, where the people are migrating from the lower income to middle class. Now, with more money in hands of the people who are earning more than, let's say, $5,000 or $8,000, $10,000 within our income pyramid, more money is moving towards spending towards this discretionary, aspirational lifestyle products.
Correct. Absolutely.
And that's what is driving the entire this segment. And if you just have to go back and just think over last 3 to 4 years, and I'll just give you some of the industry for you to just look at. So for example, let's say jewelry industry, let's say auto industry, or for that, look at the e-commerce industry, or consumer durable industry. Now, these four categories of industry, you can say the growth has been substantially higher. Whereas
Correct.
if you look at the, like you rightly put in, some of the categories on the staple side, it is actually very, very lower. So clearly the opportunities today is looking more toward discretionary. So we are primarily driven by the philosophy of high quality, high growth, and we will look at companies which continue to grow at a good earning rate in the future, and we'll try to capture some of the best opportunities available in the entire consumption space, more focused on discretionary at this point of time.
So, Ritesh, now coming back to the elephant in the room, the current market situation and the valuations. Will you still find value in terms of creating a portfolio, model portfolio, which will be a high growth at good valuations?
Very valid question, because that's one question we are getting from a lot of our partners also. And we have to look at from a perspective of price earning to growth, not only PE. Because what happens that we
The
always
PEG ratio, as you have, I
yes,
think,
PEG
coined it.
ratio, right. Because what happens that if you look at, let's say, a company today at a 50 P, let's example, and for a moment you will see it's a very, very expensive company. 50 P is very, very high in terms of the number. Now, moment you look
Just
at
see the PE, just see the PE and
if
not
you
the
look at
earnings, then
PE,
it is expensive.
yes, but if you look at the PE, let's say growth of that company, let's
Correct.
say the company has delivered a 50% growth, then you realize that the company today is at 1 PEG, by P divided by the, so basically trailing P divided by the future growth. Right.
Correct.
Now, suddenly the company which are looking expensive to you will look much more attractive in terms of valuation. Now, if you
Right.
look at the data that in the past also, all the good companies, multi-bagger companies, let it be in the past, we have seen a lot of 2 decades, 3 decades, a lot of good companies have delivered very good, handsome returns to the clients. They have never been a lower P companies. They've always been a slightly elevated P, because these company also trades at a premium.
Because
Right?
the earnings growth is justifying the premiums also.
Absolutely. So what we have to do, we have to look for the valuation adjusting for growth. If you look at for the valuation adjusting for growth, we will look at companies where it is reasonable and we continue to see a good potential in terms of earning growth of those companies, and that kind of companies will see in part of the portfolio where we see valuations are high, but the future growth are not sustaining. Of course, we will not be looking at maybe getting to those companies in the portfolio, because then, like you rightly put it, the risk reward may not be in favor of in terms of investment.
What is an ideal PEG ratio which you would look at?
So I will not say that what is the ideal PEG ratio in the fund side, because that is not the right way. But on an average, if you look at anything under 1.5 is fine in terms of valuation.
So lower the PEG ratio, the better the valuation of the company.
Sorry.
Lower the PEG ratio than one or lower than that. That means the valuation is better for that company with a higher growth prospects. Is that correct?
Yeah, but generally lower than one, very
Very
rarely will get
difficult
a
to
company
find.
high growth and very low P. It happens maybe in a correction or in that kind of phase. So yes, you rightly put in, Sunilji. Anything around 1.5 is a very good valuation, and if it crosses 2, then you have to be a bit cautious on the valuation side, because any underperformance on growth can have an impact on the future price of the company, because end of the day in market, what we say, Sunilji, is the price of slaves of earning.
Correct.
So as long as the earnings will justify, price will move in the long term. But if
I just wanted the viewers to understand what is that PEG ratio and how should they be judging the valuation and the expensiveness of the portfolio.
Correct. So like you said, so if the earning growth of the company is higher than the P ratio or slightly lower than the P ratio, so 1.5 is a very, very comfortable number in terms of any company in the PG. It's a good valuation. You can say the good valuation on the valuation side. If the number is crossing 2, that is becoming slightly pricier, and you have to be careful in terms of that because if the growth does not support, then you may see a negative risk and reward in terms of that company.
Perfect. Thank you, Ritesh. Thank you so much. It was an amazing conversation which we've had.
So, Sunilji, I'll add it here, and then maybe I can conclude on the remark side. Is that if you look at the Motilal Oswal and our funds all across, we tend to focus on the best opportunities in the themes which we are trying to play in the fund. So our active ratios continues to be very, very high, which basically mean we don't try to hug the portfolios. We don't try to hug
the benchmark.
We primarily aim at buying best 2025 companies in the theme or the fund we are looking at. And those companies, because of the high growth, it may happen they may not be closer to the benchmark in terms of weightages. So the active ratio, which is how much is the portfolio away from the benchmark, tends to be slightly higher in our portfolio, which is something different than lot of funds.
Alpha gets generated through active participation rather than passive participation and hugging the benchmark.
Absolutely. So that is something unique. We as a fund house, we do when we do a portfolio construction, is that our entire aim is to build a portfolio of some of the best possible companies on the earning side. And because of that, this uniqueness comes in the portfolio in terms of the very low overlap with the index and very, very unique. And as you rightly put in, some of the last offerings, if we see, even though it's a very short period, but the funds have actually justified that unique kind of portfolio construction. I believe consumption as a theme is for 5 to 10 years, so not a very, very short kind of a theme.
Anything which is related to where equity will be concerned, I think nobody should be looking at it less than 5 years.
But one more point I'll put it here is that when you invest in a thematic, you should make sure that the economy is also aligning with it.
Correct.
And what we believe, Sunil, is that today the economy is aligning. So for example, if I can go back 20 years back, and if I have to invest, let's say, will I invest in a IT fund? Absolutely. I will invest in IT fund 20 years back, right? Because last 20 years, IT has delivered stupendous returns, right?
Correct.
20 years back, if I got a chance to invest in a banking fund in, let's say, 2005 and 6, I would love to do it, right? But at that point of time, the investor confidence was not so high because generally investors tend to look at recency, what has worked in the recent times, or a recency bias, what has worked out.
All the very best to you and your team for a successful launch. Thank you so much.
Thank you so much, Sunilji. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.